It's Friday evening, April 3rd, 2026, and it's time for our monthly update. We're going to dive into how our QQQ and QLD investments have performed and take a closer look at what's been happening in the markets. The market's journey from April 7th, 2025 to October 29th, 2025 was absolutely remarkable. Over those 7 months, QQQ delivered an incredible bullish run, surging from $402 on April 7th, 2025, to a peak of $637 on October 29, 2025. During this period, QQQ stayed above the SMA 50 purple line for 7 straight months. That was an amazing run. However, everything changed after November 14, 2025. QQQ has now broken below both the SMA 50 purple line and the SMA 200 green line. We're expecting a death cross soon, likely sometime in April. The last death cross occurred about 1 year ago in April 2025 when Trump announced a broad package of tariffs. Although that tariff policy was relatively easy to reverse, the current war situation is not easy to reverse at all. This creates significantly more uncertainty compared to last year. Today, QQQ sits just below $585, positioned below the SMA 200 green line. Since QQQ has broken below this critical level, let's add both the SMA 300 blue line and the SMA 20 black line to our analysis for better context. QQQ recently touched the SMA 300 blue line and rebounded above it. Next week could go either direction, so we need to stay vigilant. As you can see here, QQQ now faces 3 resistance lines it needs to break through. First the SMA 20 black line, second the SMA 200 green line, and third the SMA 50 purple line. The best case scenario would be QQQ powering directly through all 3 SMA lines in succession. However, QQQ may struggle to reclaim the SMA 200 green line based on historical patterns. We saw this exact scenario play out last year. In mid-March 2025, QQQ bounced from the SMA 300 blue line on March 14th, climbed above the SMA 20 black line on March 24th, but couldn't break back above the SMA 200 green line on March 26th. Then it plunged below the SMA 20 black line on March 27th. It even dropped below the SMA 300 blue line on March 28th. After failing to reclaim the SMA 20 black line on April 2nd, it crashed all the way to $402. Even after rebounding from that $402 bottom, QQQ had to attempt breaking through the SMA 20 black line 3 separate times. First attempt on April 9th failed. Second attempt on April 14th failed. Finally, QQQ successfully penetrated the SMA 20 black line on April 23rd. Then it took until May 12th to break through the SMA 200 green line after trying twice. That breakthrough on May 12th marked the starting point of the 7-month bull run. This pattern was very different from March 25th, when QQQ was able to penetrate the SMA 20 black line but then failed to break through the SMA 200 green line on March 26th. So we need to carefully monitor whether QQQ can successfully break above both the SMA 20 black line and the SMA 200 green line this time around. The critical questions remain: what will be the bottom price for QQQ? Where will this selling finally stop? Let's introduce Fibonacci retracement levels, which include 23.6%, 38.2%, 50%, 61.8%, and 78.6%. Among these 5 levels, the 3 middle levels of 38.2%, 50%, and 61.8% are most commonly used by traders and are shown in this chart. Fibonacci retracement levels are horizontal lines used in technical analysis to identify potential support and resistance areas during a market trend. Derived from the Fibonacci sequence, these levels help predict where a price pullback might pause or reverse. The Fibonacci retracement levels show that 38.2% is approximately $547, 50% is approximately $519, and 61.8% is approximately $491. So if QQQ drops below the SMA 300 blue line again, these 3 Fibonacci retracement levels can become critical support zones. First at $547, second at $519, and third at $491. Last year in April 2025, QQQ successfully rebounded at the Fibonacci retracement level of 50%, which was just below $400. This lowest price of 2025 at $402 was very close to the prior all-time high price from November 2021. This demonstrates that prior all-time high prices serve as important support levels. For this current cycle, we need to monitor whether QQQ can find solid support around $539 or $502, which are prior all-time high prices from previous market cycles. While the recent drawdown appears like a significant correction on these daily charts, the weekly view reveals a different story. QQQ is actually still performing quite well when you zoom out for the bigger picture. Since April 2023, QQQ has remained above the SMA 200 green line continuously. Currently QQQ is positioned near the SMA 50 purple line on the weekly chart. Now we're watching closely to see if QQQ can rebound above the SMA 50 purple line or if it will drop below it. Now let's discuss what happened in the markets this week. The US stock market staged a powerful relief rally during the past week, with the Nasdaq leading the charge higher before trading paused for the long holiday weekend. The March jobs report delivered a stunning surprise turnaround that significantly eased fears of an imminent recession. The US economy added 178,000 jobs in March, dramatically exceeding the consensus estimate of just 90,000. Meanwhile, the unemployment rate unexpectedly fell to 4.3% from February's troubling 4.4% reading. This robust employment data completely contradicted the narrative of economic weakness that had gripped markets throughout March. The Nasdaq surged over 4% for the week, marking its best performance since November 2025. The semiconductor sector participated enthusiastically in the rally, with the SOX index posting an impressive 5.2% gain for the week. Nvidia rebounded a massive 11% following analyst upgrades, while AMD, Micron, and Applied Materials all posted solid gains exceeding 6%. The Magnificent Seven stocks collectively added back nearly $200 billion in market capitalization, partially recovering from the previous week's brutal $300 billion wipeout. Despite this sharp rally, analysts caution that significant technical damage remains from the March sell-off. Let's examine our ETF comparison. QQQ stands at $585, which is 8% above the previous all-time high of $540 from February 19, 2025. QLD, the 2x leveraged version, is priced around $62, representing a 4% increase from its peak of $60 in December 2024. TQQQ, the 3x leveraged version, trades around $43, sitting about 8% below its peak of $46.90 in December 2024. This comparison shows TQQQ has delivered the worst percentage return measured from peak to peak. However, my actual stock portfolio tells a completely different story. My personal portfolio shows QQQ with about 19% return, QLD with 25%, and TQQQ leading with an impressive 40%. Why such a massive difference? Because you could purchase TQQQ at dramatically cheaper prices during last year's downturn. For example, on April 7, 2025, TQQQ traded at just $17.50, representing a massive 60% discount from today's $43. Meanwhile, QQQ was at $402, only a 31% discount from today's $585. That enormous price differential during the crash is exactly what generates these outsized returns over time. Now for our QQQ versus QLD $100 challenge portfolio update. Starting in March 2026, I've been buying QQQM instead of QQQ because QQQM offers lower fees, which compounds to significant savings over decades. Since March 2026, I've also been investing in both QQQM and QLD through a Roth IRA account to completely eliminate capital gains tax. These optimizations matter tremendously for long-term wealth building. On March 18, when QQQM dipped during the sell-off, I added 0.40 shares at $246.43. Combined with our previous QQQ holdings and new QQQM positions, we've invested a total of $4,900. Our current unrealized gain is approximately $910, delivering a solid 19% return. For QLD, on March 18, right after buying QQQM, I picked up 1.52 shares of QLD at $65.77. Combining QLD shares in both the Roth IRA and individual accounts, we've invested a total of $4,900. the results are even more impressive. Our unrealized gain now stands at about $1,180, giving us a strong 25% return. The performance gap between QLD and QQQ continues to widen, especially in rising markets. These results powerfully demonstrate QLD's leveraged structure at work. It's engineered to deliver 2 times the daily performance of the Nasdaq 100. Yes, leverage amplifies volatility in both directions, but it also delivers significantly greater upside potential when markets recover and trend higher over time. Since May 2024, we've maintained an unwavering commitment of investing at least $100 into QQQ and $100 into QLD every single month, no matter what the market does. This consistent, disciplined approach perfectly embodies dollar cost averaging, or DCA. The goal is straightforward: reduce the impact of short-term market swings by spreading our investments over time. We automatically accumulate more shares when prices are low and fewer shares when prices are high, all while maintaining laser focus on our long-term objective. Our strategy rests on 4 fundamental rules that never change. First, invest monthly without fail, regardless of headlines or emotions. Second, hold long-term for 30+ years to capture the full power of compounding. Third, never sell regardless of market conditions, crashes, or euphoria. Fourth, never, ever use dangerous margin that could force us to sell at the worst possible time. This approach is specifically designed to succeed over decades and completely removes emotion from the investment equation. If you want to see 30 years of compelling data proving this methodology works through multiple market cycles, check out my deep dive video Cash vs SPY vs QQQ vs QLD vs TQQQ, 30-year showdown. That wraps up our April 2026 update. Despite intense market volatility, geopolitical uncertainty, and a brutal March correction, our strategy continues working exactly as designed, and the results speak for themselves. If you got value from this video, smash that like button, subscribe so you don't miss next month's update, and let me know your thoughts in the comments below. As always, this content is for entertainment only and not financial advice. Make sure your investments align with your own goals and risk tolerance. Thank you for watching, and until next time, stay consistent and let the power of compounding do the work. Happy investing, everyone!